So Elon Musk is that example, right?
He's the epitome of that.
Epitome of that. The
example.
best
Mr.
example
Ambani
of that.
is some such example.
Yes.
At its core, let us look at it this way. Let us say that let us say there are 100 people out here, and all of us, all 100 people, we have some amount of money that we are accumulating, and after 5 years we want to go on a world tour. Pay Mr. Nirav Panchmatia 5 crores, pay Mr. Aashish Somaiyaa 2 crores, and buy 5 crore worth of Bitcoin. Sorry, all that is not
possible.
He came back to India. He was the one who helped Goldman Sachs to set up their first ever India equity fund. And then based on his track record, he was again elevated to be CIO for not only India but also emerging markets. So that entails investing in like 27 countries, across Latin America, Eastern Europe, of course the whole of Asia, etc.
Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
The entire system has to make sure money moves from the guys with surplus capital to the guys with the ideas and deficit of capital.
Right.
And like I said before, it is incumbent upon the system to make it worthwhile for the guy with the ideas. The world revolves around
those guys.
So
Elon Musk is that example, right?
He's the epitome of that.
The
example.
best
Mr.
example
Ambani
of that.
is some such example.
Yes.
Right? So these are the guys. I mean, that is why all of this is running, otherwise it's not needed.
That is why you and I have jobs.
Yeah, and that is why we are playing the role of channelizing this in a manner that it goes to the right people. Because we are not trying to glorify or deify people with ideas, because there are enough crooks also out there whose ideas are not worth funding.
Yes.
Right? So what role we are playing? We are just being stewards of capital.
So you're extending what is equity to now what is a mutual fund then?
Yes, exactly. Because mutual funds play this role. The people who have surplus, how does capital gets channelized to the people who have the ideas? So venture funds, private equity funds, mutual funds, pension funds. The risk return combinations and the format may differ, but all of us are doing exactly the same job. Which is that under different risk return formats, we are ensuring that capital gets channelized to
from the provider
to the
people who can users of the capital.
Yeah.
So what is a mutual fund? From a layman's perspective, a very non-textbook definition, a 3-idiot definition of a mutual fund.
See, I think it is basically, what happens is that the real essence of what a mutual fund is, it gets lost in all the exams that we give and all the certifications that we do.
Yes.
At its core, let us look at it this way. Let us say that, let us say there are 100 people out here, and all of us, all 100 people, we have some amount of money that we are accumulating, and after 5 years we want to go on a world tour. So what will happen is that if we want to ensure that after 5 years all of us want to go on a world tour, we'll have to put our money to some use or apply it in certain way. And for the money which we'll keep saving every month for the next 5 years, for it to reach a certain goal, it will have to be gainfully deployed in a certain manner.
Yes.
Now, all 100 of us, if we sit around trying to create these opportunities, then we'll not be able to do our job.
Yes.
And all 100 of us may not actually be able to deploy professionals to do it for us.
Yes.
But if all 100 of us actually come together, then in a cost-effective manner, we will not only be able to source the right deployment strategy, but also the right professionals to do it for us. and then we can go back to doing
So
our
100
job.
people come together, pool their capital.
Yes.
Then we decide
And they
neither
appoint
of us
a-
will manage
Yes.
it, but we'll manage a professional
Yes.
chosen on merit, approved
Yes.
by everybody,
Yes.
and we give that money to that professional.
And to keep it safe, you're not even giving those 100 people, are not
one-
handing it over to that professional.
Yeah.
The 100 people are putting it and registering it as a trust,
Yeah.
where those 100 people become beneficiaries of the trust.
Okay.
And they appoint a third party professional as a managing agency for managing the
So
trust
there's a
funds.
3-layer structure.
It's 3 layers.
So the possibility of a crook coming in and running away with your money is almost
It is zero.
nullified.
It is zero because your money is held in a trust.
okay.
And the possible crook or the managing agency, what we will call it, they only have a right to operate the trust
Okay.
and deploy the money in pre-identified objectives. That this is where the money can go.
Okay.
And there is further complication to it, that money can be put only through a custodian. So let us say that I am the managing agency and here is a trust where these 100 people have pooled their money for next 5, 10, 15 years. Now if I say that okay, to meet the objectives of this trust, we have to buy XYZ ABC equity shares. So I cannot take the money out, buy the shares, and then you are left to my mercy as to where is the money gone and where are the shares.
Right.
No.
Right.
That trust, I can only manage the affairs of the trust based on a limited power of attorney given to me. That with this power of attorney, you will move money from the bank to the account of a custodian. And the custodian will ensure that when you paid the money, you will receive shares for that. Those shares will be held with the custodian, not with me.
Okay.
Right?
So
there is
managing the money is not the owner of the money.
the person
The owner
managing
is
the
not
money.
managing the money.
Yes.
So there's a triple layer structure in
Yes.
mutual funds.
So money is held in a trust.
Okay.
The trust will appoint a manager, a professional,
Okay.
and the trust will also appoint a custodian for safekeeping of the money and the
So
shares.
the professional marriage can only apply that money
Yes.
to buy some investments
Yes.
and take it back. He cannot himself take it and run away with it.
Not in the custody, not at all.
Okay.
And whatever so I'll give you an example. The managing agency theoretically, instead of buying shares,
Yeah.
can start buying Bitcoin theoretically.
Yes.
The custodian will never execute never make a payment
Never
for such
allow
a
him to
transaction.
do a Bitcoin purchase or an FNO which is not allowed. Or a
Because the
structured
custodian
product.
will also be privy to the agreements of what has the trust appointed the manager for.
Okay.
It's obviously not opaque to the custodian. The custodian knows what is this trust, what is the managing agency, and what are the objectives of the trust. So the custodian will only honor those transactions which are in line with the objectives of the trust.
Okay.
So if you, instead of buying shares, if the managing agency gives an instruction that, pay Mr. Nirav Panchmatia 5 crores, pay Mr. Aashish Somaiyaa 2 crores, and buy 5 crore worth of Bitcoin, sorry, all that is not
Not
flying.
possible.
The money won't move.
Not a single penny can move outside of
It
the
can only
objective
be
which
paid.
was.
It can only be paid to the clearing house of the stock exchange
Okay.
to receive shares.
Okay.
That's it.
Then why do some of the skeptical investors doubt?
See, because a lot of times what happens is that bad performance. See, look, any managing agency or any fund manager, however good they may be, the stock market is a place which is about uncertain outcomes. Ultimately, it's not that the fund managers can will performance. They can do their best, but stock market is a complex system. It depends on multiple variables.
Yes.
So what happens is that the best of fund managers over the long term, they are supposed to appreciate your money. They are supposed to beat the benchmark index. But despite all their competencies and best efforts, there will be phases when they are not doing as well as what you expect them to do, right? So what I have seen is that bad performance or poor investment decisions lot of times get confused with bad intent or malintent. So
The
every
intention
time,
was always good.
yeah, because see,
And
I
it's
have
a
told you
relative word.
structurally, I have told you that structurally, a fund manager can make bad investment decisions. And the fund can perform suboptimally vis-a-vis expectations or benchmarks or whatever the objectives are laid out. So you can definitely blame any manager for their performance. But the structure which we just discussed precludes the manager from running away with your money or indulging in malefied, actions. So the structure protects you from bad intentions or malefied.
So isn't that a very wonderful, the design of the mutual fund industry, isn't that such a wonderful thing that in the world of money, when you lend it or when you invest somewhere, the 50% probability is person with bad intention running away with it.
Of course.
We are doing away with it completely.
Yes.
अब जो एक risk है, the only risk is a market risk that the fund manager in his right mind deployed it with the right intention, but we didn't get the results that we want.
Absolutely.
That is the only risk.
Absolutely.
The risk of somebody, the Ponzi scheme risk is not there
No, of course not.
in mutual funds. That's a wonderful thing. I mean, this is very
Because
underappreciated.
there are third parties. By the way, you will be, for listeners, it might be interesting to know that after doing all of this, what is the value of the trust funds, the mutual fund, what is the corpus, and what securities are owned or held in the custody. It is reconciled every day.
Wow.
Right, so it's not like we are not
Every day reconciliation.
Of course.
And you are audited and re-audited and all that stuff is a different
on
thing.
any given day, end of day, we know that what is how do you think NAVs are computed? It is it's something which is हिसाब हर दिन.
So NAV
हर दिन का हिसाब हर दिन
का हिसाब रोज होता है, रोज NAV आती है. So NAV is net asset value. अगर म्यूचुअल फंड का एक यूनिट खरीदना है मुझे, if I want to buy it, what is the price at which I buy? And this is computed on a daily basis.
See why? Yes, it's done.
So the accounting also has to happen on a daily basis.
Absolutely. And see, the reason why I clarified this, because you mentioned that is there any chance it is a Ponzi and all? Why it can? Because why I give you that example is because what happens in a Ponzi scheme? I take money of the subscribers and pay money to people who are withdrawing.
Yeah.
Right. So there is no return in the scheme.
इसकी टोपी उसके सर. You're taking new investors' money, paying the old investor never invested. It's a fraud scheme.
So that is what happens in Ponzi schemes. You know, whether it is done as plantation scheme, whether it is done as some crypto scheme, or whatever it is.
Yeah.
That is typically the structure. It happens in a Ponzi scheme. In a mutual fund, it is impossible because if I receive money in the mutual fund, then in front of that, either that money is in the bank or there are equivalent shares or bonds lying with my custodian.
Only two ways. दो ही रास्ते हैं. या तो पैसा बैंक में है, या तो कोई असेट खरीदा है.
और रोज का हिसाब रोज मैच करेगा.
रोज का हिसाब रोज होता है क्योंकि रोज NAV कैलकुलेट करना पड़ता है.
मैच कैसे होएगा?
Wow.
Yeah, so it is very.
Then why be afraid?
Commonsensical. Yeah.
And you can move from one mutual fund to another if the guy is not performing. So the only risk is a market risk. What is a market risk? That आपके हिसाब से शेयर प्राइस नहीं चले और शेयर प्राइस डाउन हुआ है तो आपको टेम्पररी बुक लॉस हुआ है.
पैसा मीनिंग सी जो जैसे आवर रेगुलेटर हैज डन अ फैबुलस जॉब बिकॉज नाउ देयर इज नो लॉक इन. मतलब आपने मेरे को पैसा अगर म्यूचुअल फंड में आपने पैसा दिया तो दे कैन नॉट से ना कि अभी अगले साल आना. नो, इफ यू गिव रिडेम्पशन
tomorrow morning.
And we are so much ahead now. We are going to this T+1 settlement. So 48 hours the fund has to pay you, meaning T+1 meaning.
And
if you give me redemption
isn't
today,
T+1 unique to India? I mean, we've beaten
global,
the Western world.
It's a global benchmark.
It is a global benchmark. I think even in US market it is not T+1.
Not T+1. T+2 है सब. Everywhere is T+2.
So T+1 यानी अगर मुझे if I press the redemption button, if my client or investor press the redemption button on the second day, second working day he gets the money in his bank.
So second day meaning today before 3 o'clock if you give a redemption. तो second day बोला आपने लेकिन होता है 36 hours.
Okay.
Because today 3 o'clock if you give me a redemption.
Okay.
That means you are giving me 1 day for me to liquidate whatever. So the stock market, the exchange will pay me tomorrow.
Okay.
So day after tomorrow, it's not end of day. Day after tomorrow, 9 a.m. to 9:30 a.m. you will get the money. So it is 36 hours.
That is the fastest in the world.
It's fastest. And by the way, our honorable SEBI chairperson, she announced that forget T+1, we are moving to T+1 hour or same day, immediate live.
T+1 hour?
Yeah, live settlement.
Oh my God.
So what will happen? I think I envisage that in the next couple of years at least, you will depending on when you redeem, in maybe 2 hours, 3 hours, 5 hours, 6 hours, you will start. You will receive. So, I think we are regulatorily.
Yes.
The mutual fund structure.
We have a wonderful regulator.
Superior, yes.
We have a wonderful regulator, very strict, which is good for the investors.
Yeah.
Okay. I mean, which is a bit painful for.
And I would just highlight that never to confuse bad performance or bad intention with malified intention. They are two different things. When somebody steals your money, they may be very competent, but their intent is bad.
Right.
In the mutual fund industry, you can have people with varying competence, but bad intent के लिए जगह नहीं रखा है regulation में.
बराबर.
There's no place.
बच्चा क्लास में फेल हो गया है, लेकिन चीटिंग नहीं किया.
हाँ, exactly.
चीटिंग नहीं किया उसने.
Yeah, exactly.
Okay. Ashish, tell me something about Whiteoak. So there are about 44, 45 AMCs, mutual fund companies in the. So where do you stand? What's unique about Whiteoak?
No, Whiteoak.
What's the pedigree?
See, so as a group. Whiteoak Capital as a group, why I'm referring to as a group, because we are in some sense a Indian MNC. It's present in multiple parts of the world. We have asset management companies in multiple countries. Okay. So when I'm referring to Whiteoak Capital Group, it is neither new nor small. It started in 2017, June 2017. And like you were kind enough to allude in your introductory remarks, it was founded by my colleague. His name is Prashant Khemka.
Yeah.
So Prashant actually founded Whiteoak in 2017, and before that for 17 years he was with Goldman Sachs Asset Management. Very unique kind of profile, because he's one of those rare gentlemen who's managed money as a portfolio manager in US. Then he came back to India and he helped Goldman Sachs Asset Management to set up their.
And Goldman Sachs is one of the leading financial entity in the world.
Yeah, absolutely.
Hailing from US, and it is a very unique track record that almost every second US Treasury Secretary is a former MD of Goldman Sachs. So that is what Goldman Sachs is.
Yeah, it's it's amongst the most well-regarded, most successful, over 100 years, right? So Prashant worked there for 17 years, and why I said he has a unique experience, because in his fund management career he would have met and covered over 2,000 companies, because he's one of the unique guys who has managed money in US, then came back to India. He was the one who helped Goldman Sachs to set up their first ever India equity fund. And then based on his track record, he was again elevated to be CIO for not only India but also emerging markets. So that entails investing in like 27 countries, across Latin America, Eastern Europe, of course the whole of Asia, etc. Right? So he set it up, and as we speak now, from 2017 the journey started. We are now about $7 billion of assets. And what is lesser known is, everyday people track foreign portfolio investors, FIIs, etc. So lesser known fact is that Whiteoak is probably the largest single country FII investing into India. Why I said single country is because bulk of the money which comes into India, it comes through some emerging market fund, Asian equity fund, BRICS fund, global fund, etc. But amongst the people who exclusively and directly invest into India, Whiteoak would be amongst the largest.
So foreign institutional investors, the foreigners who want to invest in India, they invest with various entities. They can invest in multiple countries.
Yes.
Whiteoak has the unique standing.
Single country India.
That you have to only invest in India. So if somebody is giving those $5 billion that Whiteoak has got, people are giving to Whiteoak only to invest
exclusively
in India.
To invest.
So Indian equity is becoming an asset class, an investment avenue in itself.
The growth of a manager like Whiteoak bears some testimony to the fact what you mentioned, that India is increasingly becoming a single country focus area or a single country asset class. And at $5 billion we are amongst the largest, quite sizable. So we manage 7 billion. 5 billion is global money invested in India. About 2.2 billion is domestic investors' money.
So Indians investing in India, 5 billion is foreigners investing in India.
Absolutely.
And as you said, that if somebody outsider wants to invest in India, Whiteoak is one of the preferred channels.
It's one of the preferred, whether there is sovereign wealth funds, pension funds.
Sovereign wealth fund, Ashish, are countries.
Countries funds.
Countries fund, a country's treasury which wants to invest in equities.
Equities, yes.
Don't you think it's time India has a sovereign wealth fund?
Yeah, I mean, I think we do have, but it's more probably infrastructure. The government's focus is on infrastructure. So I think we ourselves are capital deficit in that sense.
Yeah.
So us investing.
But that point, Ashish, I would like to counter. Okay, so I have a home loan, right? Where I am paying around 8.25% simple interest, and I also have a equity portfolio through mutual funds predominantly, then Indian equity, US equity. My wife always keeps on pestering, why don't you take
Repay
that
the
money
loan.
and pay the loan? And I said, see, 8% simple interest. I get tax benefit.
Yeah.
And I am earning whatever, 11, 12, 13% compounding.
Yeah.
Okay. And I have to pay tax only when I sell.
Yeah.
So there is this gap. So even if India is capital deficit, still I think it's time that India has a sovereign wealth fund.
So probably maybe at a country level, I think the priorities and how.
And
how it
money
would
is
be
not
seen.
that expensive. Money is cheap now.
Yeah, money
today,
is cheap.
if you raise hand, you get money as a country, as a corporate, as an organization, as a startup.
Yeah.
So, एक time था when India was not attracting capital.
Yeah, now
with
of
due
course,
respect,
now we attract a lot of capital, and in fact we will continue to attract huge amounts of capital as we go along, maybe next 20-30 years.
So you were saying
No
India
doubt.
will become a magnet for the capital from the world.
Yeah, because see, there is one single determinant of this. Like people talk about many complicated numbers, but if you ask me one number to track in any given year, how much of the world's incremental growth is contributed by your country?
Yes.
That is ultimately the single biggest driver of.
So I think in the next 4-5 years, I read a statistics where India will be contributing 12 to 13% of world GDP.
Yeah, in fact, last year I
Second
think it
only
was
after-
nearly 20%.
Okay.
This year it is expected to be 15% plus. So in the foreseeable future, you're absolutely right. It will consistently be double digit.
Yes.
So if you are contributing large part of the world's growth,
GDP.
so it stands to reason that basically investments will be made where there is growth.
Yes.
Because returns are generated on growth.
Yes.
So investment will follow growth.
Yes.
And if you are started to contribute a good part of the world's growth, then obviously you will attract more and more.
Okay.
Investment.
So I'll do a liberal arts thing like physics. Water flows where there is slope. Money goes where there is return.
Absolutely.
जहाँ growth है वहाँ पैसा आएगा. India today is the 5th biggest economy worldwide. In terms of purchasing power parity, it would be still bigger. A fastest growing economy, biggest contributor, second biggest contributor to the world GDP growth.
Yeah.
So the money has no option but to come to India.
Absolutely.
And it will come at a probably increasing rate in
Accelerated pace.
Accelerated
yes, because the rate and because what happens is that we spoke about money chasing growth.
Yeah.
But there's another dimension to keep in mind, that growth is relevant only if it comes at scale. So the scale, there will be other countries also whose GDP growth is 7%, example.
Smaller ones.
But if you're an African
Bangladesh
country, if you're an African country with 100 billion GDP and you grow 20%,
you cannot absorb that much capital.
Yeah, I mean, let's say your incremental growth is 20 billion.
Yes.
So think of it that to have incremental growth of 10-20 billion, how many jobs you will create, how much power you will consume, what tax collection your government will do, how much steel, cement, how many Apple iPhones your people will be able to buy.
Yes.
But if you are 3.75 trillion and you grow 7%, then you're adding 250 to 300 billion. Then you're adding one Pakistan every year.
Okay, wonderful.
So to add 250 billion, you can imagine to add 250 billion, meaning you are adding one more country every year.
We are adding one Pakistan every year.
Yeah.
Okay.
तो एक पूरा country आपके GDP में अगर उसका इजाफा होता है तो उसके लिए then you see how many jobs you will create.
I hope some of the Pakistanis watch this podcast.
So that's the scale now.
We are adding one Pakistan every year to the economy. That's a good metric.
And in a matter of next 2-3 years, we'll add much bigger.
Yeah.
There will be a point in time, like Saudi Arabia is 1 trillion.
Yeah.
There will be a point in time.
So how much
in the
in
future,
terms of how much $1 billion we are adding every year? Right
so
now?
we are adding 250 billion a year.
Okay. So maybe 5 years down the line we'll add a Saudi Arabia too.
5 years, put it this way, that 5 years down the line, no, maybe 10-15 years down the line.
But we are adding a Dubai, almost a Dubai?
Yeah, absolutely.
Wow.
So that's the scale. So why I said growth is relevant at scale, because if it comes at scale, then you are, that's why when people are talking about creating lesser things, we are talking about creating cities. Because when you grow at that scale, then you are, airports, ports, infrastructure, power consumption, steel, cement. So there is a reason why people want to manufacture things out here.
Yes.
There's a reason why people want to invest out here, because everybody is looking for growth. And the world is run by corporate interests. Everybody wants the market cap and the share price to go up.
It's
And
capitalism.
there is only one way it will go up if you grow your earnings.
Okay.
And that growth will only come from capturing markets which have a runway.
Right. So that answered the next question I was going to ask you. Why India? So I think we have already answered that question.
Yeah, so
why not India? So as Warren Buffett, my guru, says, never bet against US. I would say never ever, at least for the next 30-40 years, never bet against India.
So there is connecting US, India and Mr. Buffett, there is one interesting observation.
Okay.
If you see, whenever Mr. Buffett is asked that, Mr. Buffett, what is the secret of your success?
Yeah.
He says it in multiple ways. Like if you see biology, he says, I won the ovarian lottery.
Ovarian lottery, yes.
But Gumma Phira ke basically he's saying the secret of my success is that I was born in America in
at the right
1930.
time, yeah.
Because if he was born in 1930,
Yes.
then 40s and 50s was education, and his investment career, 60s, 70s, 80s, 90s, it coincided with America becoming a superpower.
So if a teenager is there in India today,
That's
he is growing up in an India that you and I have never seen, never imagined.
So the people who are today 25 to 35 or 25 to 40,
It's a golden age.
they are the ones who will probably be the richest generation.
Okay.
That is my sense.
Yeah.
Maybe our generation in its fag end,
Yeah.
but the people who are say 10, 20 years younger than us now,
Yes.
that's going to be our richest generation. That is my sense. And the people who are investing in India's stock market in 20s, 30s and 40s, they are the ones who are in the right place at the right time.
Right.
There are no reasons. There are multiple reasons why you should be investing in India right now. The only reason not to invest, I don't think there is no reason not to invest. But however kicked or convinced you may be about India as a country, you mentioned about US. I think the other market where one should always invest is US.
Yes.
Because they are the mecca of all innovation.
In fact, I believe, Aashish, there are only two equity markets in the world.
Absolutely.
Worth looking at. US and India. There's a piece in US, like I'm an investor in US tech over the last 2-3 years, and the AI piece and all. Nvidias of the world. So I believe there are certain corporates in India, US, certain R&D companies. That piece is the only piece missing in India. I think Indian market is broader than US market.
Yes.
One of the broadest equity market out there.
Yeah.
We get 7,000 choices here and all kinds of sectors.
Yeah.
But at R&D and the high level technology is missing. So until that piece is missing in the jigsaw puzzle, you invest in US. And mutual funds allow us to do that. Why reinvent the wheel? Why do you want to open a demat account?
No, I completely concur with what you said, that if there are any two markets to really their genuine market flavor, genuinely, and having a runway and a scale.
Yeah.
See, because Europe,
everybody
has learned a lot from Europe, but doesn't have runway and scale anymore, unfortunately.
Yes.
If you see countries like Japan, China, they've had their own experiments, right? But India and US, and there is another thing which is about India and Indians. Most of us have read American literature. Our finance is heavily influenced by American literature.
Yes.
Right, and a lot of our practitioners are also from America. Like
democracy and capital.
Democracy.
Your founders worked in US. Democracy and capitalism is common.
Exactly.
And
market structure.
Market structure is common. We have borrowed, although our constitution is from UK.
No, our colleges still teach US literature.
Yes.
Finance colleges, they still
and
teach
it is a
US
thriving economy. I mean, they keep on making blunders, but they keep on coming out of it also.
And see, I'll tell you another interesting thing. We spoke about growth. Let's understand that we speak about companies when we speak. Let's understand that at a country level, growth is always some function of population and productivity. Today, one of the reasons why India is expected to thrive is because we have the right combination of population and the investments in productivity. Look at it this way. Just having people, but having people in the right age bracket, whereby your population construct is diamond shaped, meaning that you have young people, lots of working age people, and few older people. So right population construct. So right population construct is important for productivity. And apart from that,
which we in the world of investing call the demographic dividend.
Demography. But apart from that, you look at it this way. At the right time, what we have done, just having right population is not enough. Having right, telecom network, investment in ports, logistics, infrastructure, the right taxation system, the right regulatory framework, Now we have these production-linked incentives which are encouraging manufacturing plus indigenization of technology.
Yes.
Right? So population is one, but working hard to ensure that we enhance the productivity of that population, like a new education policy.
Yes.
See, previously we used to insist that if you want to be an engineer, you better learn English.
Yes.
Now what is the government saying?
Regional languages.
भाई जिस भाषा में चलेगा तुम पहले engineer बन जाओ, English तुमको बाद में सिखा देंगे.
बराबर.
See, that enhances productivity by a mile. Right? Because if you first insist that everybody will learn English, only then you can be engineer, doctor.
So you're putting a filter, a bottleneck,
it's a big
where
bottleneck.
everybody is not going through it.
And there is nothing to say that the people who speak English are the brightest.
Yes.
You can be very bright, but you can be Hindi speaking.
Of
How
course
does it
not.
matter?
Yeah.
So all that we are doing to enhance productivity. So growth is population and productivity. And we are slowly getting those combinations.
So all those factors that you mentioned, we are seeing all of them fructifying in India simultaneously.
Yeah. If we did not have, people don't give enough credit to our telecom network. If we did not have this kind of communication,
one of the cheapest broadband rates in the world,
it's a huge ingredient to productivity.
Yes.
Tax reform, GST, logistics, UPI, payment systems, banking system.
Yes.
We spoke about stock market settlements.
Yes.
Previously, we used to take 15 days to settle a trade.
Yes.
That is very pathetic level of productivity for money.
Yeah.
Today, if I sell the stock and you're going to credit my account in 2 hours, that enhances the...
Fortunately, you and I are in a generation where we've never seen a share certificate. At least I have not seen. Imagine people keeping all those files and
So we will be getting the right combination of population and productivity, hopefully. And I think it will really set in motion something which we haven't witnessed. Maybe even the world probably hasn't witnessed. Let's see how it goes.
Great. Okay. So, Aashish, let's do one thing. Let's have a rapid fire.
G.
Okay.
Sure.
And here we start. Your time starts now. I call it the fast and furious. Okay. EQ or IQ? EQ. Emotional quotient over IQ. Okay. SQ or EQ? Spiritual quotient or emotional quotient? Spiritual quotient. Okay. Soft skill or analytical mind?
Has to be combination. There's no going
But here in my rapid fire, you have to choose one over the other.
Analytical mind.
Analytical mind. Equity versus anything else? Equity, okay. Indian equity versus any other geography?
Indian equity.
Okay. Large cap versus small cap?
Small cap or mid cap, whatever. But
okay.
No, yeah.
Equity mutual fund versus smart hybrids, the new hybrid products which have come in?
No, equity.
Mutual fund versus angel investing?
Mutual funds.
Okay. Done. Achha, Aashish, last 1 or 2 questions.
G.
So, a teenager approaches you. I mean, he's really impressed by your track record. You became a CEO so fast. And he says in the next, and I'll say she first now. She says that in the next 10 years, if I want to become the CEO of a mutual fund company, what is the career path I should choose? What will be your answer?
So, according to me, there is no fixed career path.
Yeah.
And second is, so it can start in any function. Ideally speaking, either start in investing or into business, which is sales and distribution, marketing.
Okay.
Those two, one of those two.
Either investing, either in the investment team,
or product or sales marketing.
Okay.
One of these 2 or 3 functions. Second thing is that, I personally feel that today 10 years is difficult. I would say more like 15 years.
You've done it.
So, yeah, I mean, it will always happen that there are some people who will be lucky to be right place, right time.
Right, okay.
Yeah, and at the nascent start of the industry, right? If you start off at a nascent point in the industry, and then there is a tailwind. So, just like you say that don't mix brains with a bull market, same way, don't always mix talent and competency with right place, right time or with a tailwind.
So you need some form of luck also.
You need some form of luck and tailwind also. Correct? Because around the time when people like me started in the industry, it was nascent. And then in the last 15 to 20 years, it has actually become quite...
Do you happen to be at right place at the right time?
Yes. And I think after people like me in the last few years, there are probably brighter, smarter people who have come, but they have come after the industry has become
huge,
too big, and lesser smart people like me got a long runway to pick up, right? So today I would say that either it takes slightly longer, or I would actually go on to say you set up your own
outfit. As
You know,
an
because
AMC.
Yeah, because see,
Is it possible, Ashish?
Yeah, because see, our regulator has made it very meritocratic and very competency centric. The entry barriers. So you can always start by taking a AIF or PMS license, build a track record, build some capital.
How much team and how much capital I require? Let's say if I want to.
So let's say if you have 10 years experience.
Yeah.
And let's say you have some track record or some competency to show, and then you take up a license as a PMS and AIF, and with a small scale you again build up your track record and your assets. So what I'm trying to say is that there are multiple ways to get to a particular goal. There's not only just one way that you enter an organization and as a
climbing the corporate ladder is one of the things.
Climbing corporate ladder is one.
Why don't you create the wheel yourself?
Yeah, and after getting say suitable experience like 10 to 15 years, let's say you've been analyst, you've been a portfolio manager. That's why I said you get 10, 15 years of experience and you try to build your own practice because this is a profession, it's not just a business, right? So build your own practice. And today the regulator is absolutely, they've kept the least possible entry barriers. So, anybody with good credentials, good educational qualifications, acceptable reputation, track record, they would get a AIF or a PMS license, which would then help them to set up their practice. And there are many youngsters who have AIF and PMS license today. If you see PMS, there are more than 400 PMS managers. If you see AIFs, they'll be in the hundreds. I'm quite sure that quite a few out of them do have the right competencies and credentials. And if they are able to do that for a few years and build the right track record, then they'll be able to set up an AMC also. In fact, somewhere you mentioned there are 40, 45 AMCs. I think there'll be hundreds in the next few years. It's already a gigantic market and it will be, gargantuan.
There's room for many.
Yeah, it's
so we have 45 lakh crore, we'll reach 100 lakh crore very soon?
Very soon. I think it's going to be multifolds. It's going to be multifolds in size.
This is just the beginning.
Yeah, we're just 500 billion in size.
Okay.
It will be humongous.
Okay.
So there's no reason why young professionals, they can have a corporate track to their career.
Right.
But at some point in time, if they're aspirational, I would just say this is at least a field which allows professionals to branch out on their own, and there are such examples. Like our founder, he had been a portfolio manager and a CIO for 17 years. Eventually, he set up his own practice, and now he has professionalized it. Right. So I'm quite sure other youngsters can do it as well.
Okay. Ashish, last question. They say one who does not read is in no better position than one who cannot read.
Yeah, absolutely.
Okay.
Yeah.
What is your reading schedule? What importance you will give to reading in our field?
See, I try to read as much as I can. In some ways, you can say that I'm perpetually reading.
Okay.
And a lot of times people think that reading means
you
reading.
Already arrived in life, you are a CEO, you still keep reading?
Yeah, I mean, because there is no end to how much you can read. I mean, the amount of literature.
Yeah.
And there are different streams, right? Like you can read about business strategy, you can read about investing, about communication skills, you can read about politics, you can read about history. So, I think there's no end to how much you can read, and we already had a discussion on how multidisciplinary thinking helps to get perspective.
So you don't read only relating to our field?
No. I read multiple things.
Okay.
I read multiple things.
Okay.
So I think reading is a must. But you know what? A lot of what people think is that when you pick up a book, you have to read the whole book. Now, I am not a big a big believer that you have to read the whole book end to end.
Yeah.
Every book has a couple of central ideas, and you have to get to the crux of it.
Yeah.
Right, and sometimes some really powerful ideas, but you have to write 200-300 pages to commercialize and make it a book.
Yes.
So I think as long as you can get the central idea or the core idea, I think so from every book I read, I'm just trying to derive, 3, 4, 5 learnings out of it. I'm not very stuck up about reading the whole 300 pages.
You will be surprised to know 90% of the books I have read the last chapter first.
so everybody, you have to have your own technique to how to.
And I am now developing a habit of reading 2-3 books parallel.
Yeah. So I actually always read 2-3 books at a time, and it's highly likely that I may not finish either of them or some of them. I won't finish.
We can move on to.
Yeah. So like you read the last page. What I do, I track the index.
Yes.
I see the introduction. I see the foreword. Those kind of, and then try to get a sense of what I want to read. Which and sometimes I might read some chapter in between, those kinds of things. But start to end, it's difficult to put so much time behind it.
Our time is a very precious resource.
Absolutely.
Great. Aashish, it was a pleasure. I am sure you are going to inspire a lot of youngsters, the Gen Z, the Gen Z, okay, and people of our generations also. So this podcast is really going to boom, and it's going to help a lot of people. Thank you for your precious time.
Thank you.
Pleasure.
Thank you for talking to me.
Thank you, Aashish.
All the best.
Yeah.
Thank you.
Yeah.
Thank you for listening to the AUM Finance podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.